Hi, this is Wayne Zell, and welcome to Blueprint for Wealth, a video blog that's designed to help your clients realize their personal dreams of wealth and freedom. And it's sponsored by Zell Law, Ruston and Savannah-based law firm serving clients all across the United States on estate, tax, and business planning matters. If you want to know more about us, visit us on the web at zelllaw.com. And also, if you want to hear podcasts and prior recordings of these videos, please visit us on Apple Podcasts or any podcast. You might be able to find us by searching Blueprint for Wealth. Today, we have a special guest and a special topic, and my special guest today is my good friend, Pete Aquino. Welcome, Pete. Welcome to the show.
Wayne, how are you? Great to be here.
I'm good. It's great to have you on the show today. And after we get done with Pete today, we will be talking about a special topic, and it's going to be SPACs. We're going to talk a little bit about SPACs, and Pete knows a lot about that. He's going to educate us a little bit today on the SPAC that he's involved with. But before we do, Pete, give us a little bit of your background. You're known as a turnaround expert in the industry, in telecom, in fiber, data center matters. Where did all of this start?
Interesting story. 30 years ago or more, I started at AT&T, and that was the Bell system. And soon after I joined in 1983, it basically separated into 5 baby Bells. And Bell Atlantic was born as part of divestiture. And I was a young man at the time looking to find an opportunity to be part of that new world. And living in New Jersey, working for New Jersey Bell at the time, I was offered an opportunity to go to Arlington, Virginia, the headquarters for operations for Bell Atlantic. And that's where it all started. And basically a student of the telephone industry that really tried to do more than telephone service. So we emerged into wireless and cable television and satellite and all of the other things that, everything started to come together beyond just the copper lines. And that was part of that period. And that's where I got my start.
And that became Verizon, right? Became Verizon.
It became
You worked
Verizon.
at Verizon for a while. Yeah. And then from there, you started turning companies around. How did you become adept, an expert really, in turning around companies that were in the telecom industry? I think of RCN as one of the examples, Primus another one that you were involved with for a long time.
Yeah, that's about after 15 years being in the Bell system, I was in corporate development and international development. We're looking at ventures outside of traditional telecom. And one of the big deals we were shooting for was to purchase TCI, cable company, which was the precursor to what Comcast is today. And we were trying to do that deal to basically work out of the Bell Atlantic territory and to become something bigger. And we did not close that deal. And that was very much a taste of what we could be, if we were a little bit more aggressive on acquisitions and being bigger. And so the corporate development team and I, 5 of us, basically spun out of Bell Atlantic to join a venture in Venezuela. So pre-Chavez in 1995, we were a team that partnered with a local partner and raised money with Merrill Lynch and Texas Pacific, and we got a nationwide license to build the triple play voice, data, and video in 1995 throughout the country of Venezuela. We did 9 cities, Caracas, Maracaibo, some of the big cities there. And by 98, Chavez came in and foreign investment dried up in Venezuela. It became somewhat challenging as a U.S. company working there. And literally came back in 2000 after 3 years as an expat and traveling back and forth, and really honed my skills in building a company bottoms up. I mean, it was a startup with private equity money building out, fiber throughout Venezuela. So I really honed my skills going from what I would call, the training grounds of the AT&T system to actually doing it yourself and hiring the contractors, importing the goods, dealing with the politics and some of the geopolitical issues of at least South America at the time, and came back in 2000. And basically, if you remember, the world was sort of melting down, and we had 9/11, and things became very distressed in the telecom world. Matter of fact, some will remember
Right.
there was a dot-com bust and a fiber glut, and a lot of companies were breaking. And I
Remember it
came
well.
back as an
Right.
operator, pretty much ready to do something cool, and everybody's companies were, you know, going bankrupt. So that's where I really got into turnarounds.
What are the keys? I mean, start getting into some other topics in a second, but the keys to turning around a company that's going through troubled times. What are the keys on your list uh, of key criteria? How do I turn around a company? Well, this is the first thing. The second thing, what are your keys to turning
Yeah.
around a company?
Well, as my wife would say, the company has to have good bones. And so, you have to be you have to have an asset that is, that has a tailwind. In the case of telecom at the time was fiber, and fiber connectivity in even the metro areas, didn't exist quite yet. So New York City
Right.
was short. Major commercial buildings was not fed by fiber. So the turnaround started with, do we have do we have good assets here? And if you think about pre-bankruptcy and all of the money that was being raised to deploy fiber, for example, a lot of money went into the ground. So step
Hmm.
one is, do you have the right assets? Do you have the right markets? And then you start working on, how's my balance sheet? Well, if you're going through restructuring, your balance sheet is terrible when you start, and after restructuring, it's pretty good. Except everybody cut your credit. It's sort of like your credit cards get cut, and you're starting to be a little bit more disciplined about capital spending. And then ultimately, I would say it's the team. So a big part of my job was to evaluate, is the team, from CEO to finance operations to marketing, is it the right team with the right vision to take a new balance sheet and to grow the company? And so that's the whole circle of life, if you will, of the turnaround world in what I would call TMT, telecom, media, or technology.
On the team side, who are the key members of your team every time you have to do this?
Yeah, very good question too. I would say the hardest.
You don't have to identify individuals,
No, of course.
but the key is what I'm looking for. Who are the key components that make this work?
Look, the key is going to be the top guy, for sure, and it could be a CEO or a general manager of sorts. But then there are, just like everything else, you can't do everything by yourself. So I found that having a good CFO is a key to success, because if you can't figure out the metrics or the KPIs, or where you're going in a forecast and be accurate about it, you're lost. You have no map. So CFO is really important, and they don't necessarily have to come from the industry. They just have to understand the business ultimately, but really understand how operations and costs translate into the P&L. After that, you definitely have to have skills on operations and engineering when it comes to telecom. It has to work. It has to work all the time, every time, snow, sleet, rain, right? Uh, and you're dealing
Hurricane.
with distribution inside of the public right of way, in the streets, on poles, underwater, many times. So engineering is really key, and you cannot cut that corner, because if the network is built with a lot of money and doesn't work or has outages, it's not a luxury. Telecom and internet connectivity, certainly phone service for emergency, is a utility. It's a necessity. So it has to be built right, and that's That's a lot of my training from AT&T, which is it has to be perfect.
which is a great paradigm to adopt in doing anything in business, not just telecom, but law or anything else. And I agree with that philosophy. Um, today, Today, you are the chairman and CEO of a new company that is in the TMT industry, and it is known as NextNav. But tell us how NextNav came to be. It's a startup company essentially, but it's an outgrowth of a SPAC. First of all, what's a SPAC for the
Yeah,
listeners
let
out
me
there?
back up a little bit. I'm the chairman and CEO
Sure.
of the SPAC, Spartacus Acquisition
Of
Corp.
the SPAC,
You have
okay.
the SPAC. And for many of the listeners who followed SPACs, they came on really strong right after COVID as a way to go public. A special acquisition uh, company basically was blank check. So if you have a track record and you could build a board and you get sponsorship, you basically could try to raise an IPO. And the IPO in our case at
Okay.
Spartacus was a $200 million IPO with no target. No target. As a matter of fact, the SEC requires no target. It's part of the rules. So you have no target, but you basically stress during the IPO process that these are the types of things that we're going to be looking for. And we focused on things we're good at, which was the TMT space. It could have been a fiber company, next generation fiber company, a data center play, a wireless play of sorts. We ended up looking at 70 companies. And typically, when in the SPAC, you have X
Wow.
amount of time to find the target. It's a limited amount of time. So we had 18 months. And if we didn't find the target in 18 months, we would lose our sponsorship, which was about 10 to 12 million dollars. What I would call a try, you know, because you have to fund all of the
Yes.
legal, all of the applications, all of the diligence, and then ultimately you got to be able to close that deal. So you need to sponsor an admin fee through the SPAC for the right to try. And there are many SPACs during the time that we started in October of 20 that came out of the woodwork. And SPACs became popular all of a sudden as a way to go public. It was efficient and it allowed a lot of startup companies to go public quickly. So we were right in the middle of that. We started pretty early, and after about 9 months, I would say, we found our target. That was next.
How did you get involved in SPACs? How did you get involved in the SPAC
Uh,
space?
I don't want to name names, but I was talking to one large
Sure.
investor, and he said, "Pete, I think you should do a SPAC." And I said, "A SPAC?" I said, "I thought, I didn't think they were very, not only popular but efficient. And SPACs have been around a long time, maybe 20 years or more. And
Yes.
some of the rules have changed to
Yes.
make them better. Um, in the past, if you had a SPAC and you found a target and people voted no, you couldn't get the deal done. And basically, in the IPO, there's a redemption phase that says, I may want my money back. I see the target you're picking, and now I don't
Right.
want to do it. Give me my money back. Well, that was a problem for a lot of SPACs because people were redeeming, and in fact, right now they're very high redemptions. And if you lose the vote, you do all that for nothing. Let's say. But in this case now, with the rules, you can separate the vote from getting the redemption back. You actually can get your money back, but still vote yes. And that's why a lot of SPACs became successful and got their deals, announced. The next challenge is
More flexible.
sure, and the next challenge is if the IPO has high redemptions, now you don't have any money for the target that you just talked about. So a lot of SPACs are
Right.
raising pipes, you know, private investment in public companies right on top of that. So we raised a $200 million pipe on top of the IPO money, suspecting that, let's say there are high redemptions, I think these days they're running in the 90s. So you can imagine you raise an IPO and the money's gone in the redemptions. You still got to vote yes, but you have to have money for the balance sheet of the
Yep.
target you pick. So you raise a pipe. And we raised a $200 million pipe once we figured out the target. And so day one, we had a war chest of 400
Did
million before.
did you have the experience? Did you have the experience of the redemptions, or was it a 90% redemption rate in the one that you were working on?
Interestingly enough, when we started, it wasn't so bad. The SPAC whirlwind probably lasted 18 months. And in the beginning, redemptions were pretty reasonable. Let's say reasonable being, 50% redemption. By the time we closed, it was running close to 90. So we were more
Okay.
aware that a pipe was not only necessary, but, required. So, and that's what people are doing now.
It's the only way that you could have done it.
Yeah, now people just, if you need money in the balance sheet, you have to raise a pipe, no doubt.
So then Spartacus went out and I guess used the pipe funding to acquire NextNav. Is that correct?
So you go through a process where you find a target, uh, you announce the target, and then you try to raise a pipe as part of the whole case. And
Right.
and once we announced NextNav, the pipe was part of the way to get the deal done. If we didn't get that pipe done, we couldn't close the combination. So we raised the money
Right.
with the team. Basically, the NextNav team did all the presenting with us as sponsors, saying we love this deal and this is why we love it. But the NextNav team was basically on stage, trying to raise that pipe money with us so that they can get the money to run their company. And that was a very successful process. And we closed the deal in October of 21. And basically,
So
once
yeah,
that deal closes, Spartacus goes away, and the combination is now NextNav Inc., a NASDAQ company.
NextNav.
Yep.
What is your role at NextNav today?
So as chairman and CEO of Spartacus, I ended up on the board of NextNav. And so me and one of my colleagues from from Spartacus are on the board of the public company NextNav. So we have basically a
What does
quarter of
NextNav do? It says
sorry. Wait.
it says the information that you sent us says that NextNav is a 3D geolocation technology company, and they have location-based applications and services network. What does that mean in English? What does NextNav do
It's
today?
a great service. Everybody uses GPS on their phone for navigation,
Yep.
for example, right? So if you want to go to a new location, you put it
Right.
in your nav and you go. Well, that's a satellite service. It's not exactly as dependable as you would think. There are caverns. Let's say in New York City, if you have big buildings, you can't really get a signal. You go in a tunnel, can't get a signal. Almost like Sirius XM radio. You got some blank spots, go under a bridge, right? And
Right.
what happened was this technology was developed about 10 years ago. Some guys that came out of Qualcomm, and what they understood is that geolocation has not only what they call XY horizontal, so if you want to go from A to B, but it's also there's a vertical component. During 9/11, one of the findings of the commission was when the first responders went into the towers, unless they were talking, they didn't know where they were, and that was one of the findings. So the government really wanted to have a solution for vertical access. So now not only you have XY on the ground, where are you on Main Street and First Avenue, but what floor are you on? And that's really critical for first responders and emergency. The government started a program called FirstNet. It's a nationwide emergency service that AT&T is now running for the government, called FirstNet. And FirstNet uses NextNav for what they call the Z-axis for the vertical. So it's geolocation for vertical that is really critical. It's a product called Pinnacle, and it's deployed in 4,400 cities across the country. It has applications internationally too, so it's very important, and it's highly accurate. So it really makes a difference, if you're on the 49th floor or somewhere between the 40th and the 50th floor, right? Especially if there's an emergency. So the
Yeah.
accuracy is really cool. And then from a GPS standpoint, as an alternative to satellite service, the company has a service called TerraPoint, which is a terrestrial based GPS system that uses licensed spectrum. And it's like cellular to a certain extent,
Wow.
but it's more powerful, and
Yep.
it really cures a lot of the dead spots and frankly some of the spoofing that goes on with GPS. And you see that now in Russia and Ukraine because they're jamming a lot of GPS signals from the
Sure.
sky. And if there was an alternative, more powerful would be great. And so that's what NextNav has cooking.
So it sounds like there's not only first responder applications, which are incredibly important, but also military applications. And beyond that, commercially, how would this be deployed in another vertical sector in the commercial
Yeah, there
sector?
are quite a few use cases for especially for the Z axis, and even for a better GPS system from the ground, so to speak. As cars go into an automated mode, and your cameras on the car and radar and lidar are all looking for points, you need better GPS. So it really has great application.
So this geolocation, so the sky sounds like it is the limit for this. I mean, because of automated vehicles taking flight on our highways, particularly the trucking industry, as well as automated, you know, recreational vehicles, automated regular cars. It's going to be a fact of our society, not something that we're thinking about for the future, and it's happening now. This is a great opportunity for NextNav, so I'm glad to hear that it's turning out to be something really, really exciting and hopefully successful in the future. Um, do you continue to serve on different boards? Do you continue to do consulting in the telecom industry
Yes,
or the TMT industry?
yes, I do. I'm actually running a small public company now called Sea Change International, and we serve the cable industry for both video on demand, pay per view, and ad insertion. And I'm doing that full time. I'm on the board there. I'm the CEO of that company. And I also help an energy infrastructure fund that's looking to get into digital infrastructure. A lot of infrastructure money out there for new ventures. There's not enough money to go around, so to speak. So I'm helping them to kind of look through the pile of investments that they can make, much like the SPAC process. So we're looking at deals we can do together.
This is exciting. So, to sort of wind up our discussion today, tell me what you think the next wave of telecom or the next thing that's happening that is so unexpected but will change the sea change to the industry that we should be looking at
There's
coming
a
down the
lot of
pike.
discussion about broadband to everyone, ubiquitous broadband, almost like the electric grid has expanded to every home, right? Internet access and having
Right.
bandwidth for even post COVID. Think about it. Everybody works from home and zooming away. The kids are trying to do their homework. You're trying to work. You could be at the beach. You could be at the farm. You could be in New York City. It has to be the same everywhere you go. So a lot of investments going towards broadband expansion everywhere. And that is, I think that's the next 5 to 7 years of folks raising money to, in some ways I say, fiber to the farm, it's got to be everywhere. And sometimes that, broadband access
Yeah.
isn't, isn't that great, from a satellite if you're on a farm, for example, or in a more rural area. And if the kids got to drive to McDonald's to do their homework, something's wrong. So there's going to be a lot of work in getting fiber deep into what I would call tier 2 and tier 3.
So fiber to the farm and broadband ubiquitous so that it's available worldwide, anywhere,
That's
anytime,
right.
at the same quality of
Same.
broadband that you experience wherever you are. Very cool. Very cool. Well, I really appreciate your insight today, and it's good hearing about your journey. And it's even more interesting to hear about how SPACs work. I'll probably be talking about that as soon as we get off of this call today. I'll have an educational moment, and I'll give some basics on SPACs. Not that I'm an expert on it, but to the extent we have investors that are looking at investing in SPACs, we'll be able to give them some basic information about that. So today, I've been very, very lucky to have my friend Pete Aquino join us on Blueprint for Wealth. And Pete, thank you so much for your time today. It's been very
Great.
educational.
Thank you, Wayne. It was great to be here.
And if anybody needs to find out more about Pete Aquino, just look him up on the internet. He's moving around all the time. He's creating new companies and starting all kinds of new and exciting ventures that about things that we have yet to hear about. But it's exciting, and obviously, if you need somebody to give you some advice about board structuring and how to set up a telecom media technology company, hey, Pete's your man. So I'd highly recommend it. Thanks, Pete. And stay tuned, stay with us for our educational moment right after this.
Thank you.
Hi, this is Wayne Zell, and welcome back to Blueprint for Wealth. And we're talking about SPACs today, special purpose acquisition companies. So I'm going to share my screen with you, and we're going to talk about them from the beginning. What is a SPAC? How does it work? What are the advantages and risks? And what are a few examples of SPACs that have been successful in the marketplace? A SPAC is basically a special purpose acquisition company that's formed to raise money through an initial public offering, an IPO, to buy another company that's been operating in a particular industry or sector. Or it's formed to merge with another company and take that other company public so that its shares can be traded. It's also referred to as a blank check company. At the IPO, the SPAC doesn't have any business operations or stated targets for acquisition, but it's led by sponsors who may be really experienced in a particular industry like telecom or government contracting. Investors in a SPAC may range from private equity funds that are very wealthy and well-to-do to celebrities to the general public. The bottom line is that SPACs have 2 years to complete the acquisition of a target company, or they have to return the money to the investors. So how does a SPAC work? Again, it takes 2 years for the SPAC to deploy capital and acquire its target company. And the sponsors usually have industry or sector expertise so that they can go and acquire the appropriate company and help run it into the future. The acquisition target typically is not disclosed in the offering of the IPO, which would require much more disclosure and much more regulatory involvement, which obviously is not what the sponsor wants. They want an easy path to complete the IPO. When the investors invest money into the SPAC, money is placed into an escrow and it's bearing interest. And the interest might be used to fund the working capital of the SPAC while it seeks and tries to close a deal with a target. If it hasn't completed the deal in 2 years, the money that is left in the escrow has to be returned to the investors. Typically, SPACs are listed on major stock exchanges like the New York Stock Exchange or NASDAQ. They were really hot in 2019 and 2021 and started to cool off when accounting regulations were issued. And in 2022, with the downturn in the economy, SPACs have definitely cooled off substantially. What are the advantages of a SPAC? Well, normally, in order to get an IPO done, it takes anywhere from 6 months to a year. I've been involved in a couple myself, and it's a really complicated process. But if you have a SPAC structure, it might only take 2 or 3 months to get it done. So it's really expedited. The target's owners, the company that's being acquired, might be able to negotiate a premium price due to the constraints that the SPAC must close in 2 years. And so if they're coming up on the 2-year period, there will be a lot of time pressure, and therefore the SPAC may be willing to pay more for the target than it otherwise normally would. If you've got prominent underwriters like Morgan Stanley or Goldman Sachs, and the sponsors are well known in the industry, that can bring in not only good management, but a good market profile for the stock in the public market. There are risks of operating a SPAC, and that has been realized in very recent months. One risk is there's a substantial lack of oversight from the regulators at the inception of the SPAC, simply because they don't disclose who the target company is going to be that they're going to acquire. So there's lack of disclosure from the SPAC to the investors. As many as 70% of SPACs that went public in 2021 were trading below their $10 offer price by the end of 2021, which is not a good sign. And new accounting rules that were originally introduced in April of 2021 have caused a significant drop in filings. The downturn in the economy also has contributed to a drop in SPAC filings. There are some examples, and you could get inspired by them. Virgin Galactic was supported by a major private equity fund that initiated a SPAC. That's Richard Branson's company. Of course, everybody's heard of DraftKings. QuantumScape and Open Door Technologies are some successful examples of SPACs. And if you want to know more about SPACs, obviously check it out on the internet, but we can tell you more about it, and we can introduce you to folks at Zell Law who might have experience in dealing with SPACs. Thanks for listening to Blueprint for Wealth. And don't forget to listen to our podcasts and our videocasts and view our blogs, not only on zelllaw.com, but on LinkedIn, Facebook, Twitter, and Instagram. Have a great week, and we'll see you soon.